The Hedgeless Horseman here. It's March 19th, 2023. Thought I'd just do a quick video in light of the Friday action and overall sentiment, which might be changing. I tweeted this out, what is it, like a week ago, that I remember when the Ukraine war broke out, when Russia invaded Ukraine, and all of a sudden, in one day, Europe's, and basically the West, or at least Europe, including Sweden, etc. It was so obvious that there's been, kind of a myth that everybody believed to be true, that, wars are in the past. And I just know that Sweden, we dismantled our the defenses and sold a lot of bunkers that were made during the Cold War, etc. That's never gonna happen again. And it feels like that because nobody's seen a war for 40 years. Not even really a Cold War. Well, there's been some exceptions, I guess, in the Balkans, etc. But my point is that everything changed overnight. All of a sudden, people had an example that, hey, war is not in the past. Wars can happen. And, you saw defense budgets, etc. get ramped up. And, this war is still ongoing. So, it's like, the genie got out of the bottle and it's not going to go back for quite some time. Because this war is going to stick in people's memories for a long time until, maybe the same happens. They forget about it. It's like they say that great wars comes in cycles, etc. It's like, I think I read somewhere a quote that went something like, a new war will start when everybody that remembers the old war has died off. It kind of makes sense. And of course the same goes for markets. People, we've seen for the 30-40 years lower interest rates. So nobody even thinks that interest rates can go higher. And obviously that's why when it suddenly changes, you see these bank collapses, etc. Because nobody was prepared for it. Because nobody had seen it in, decades. It's like preparing for a troll attack or a giant attack. It's like, how many people would you convince to spend money on that? Nobody has seen it. So anyway, my idea is that perhaps with this, Silicon Valley Bank and some other banks and the spillover effects we're seeing in Europe right now with Credit Suisse, I think that for gold the genie might be out of the ball, because now people again, it's not been decades, but like since 2008-9 really, perhaps a bit during 2011, but at least for a decade or so, Fed has saved the day all the time. Nobody really had to bother about store of value, etc. Gold, we've read articles. I think it was during this recent bottom. I think maybe not Goldman Sachs, but like CNBC or whatever, put out an article like that gold is basically irrelevant nowadays. So I see that as the same case. It's like, which typically you see at bottoms, obviously. It's like, because they haven't seen the gold trade, quote, work out, all of a sudden people forget about the 5,000 years of history, etc. It's like, no, this time is different. Gold is not working anymore. Gold is not needed anymore because we haven't seen any bank collapses. People haven't really had to worry about store of value. Now, just in the last week, all of a sudden store of value has become real. because you've seen bank collapses. They've seen, money in the bank is not 100% safe. So going from, you know, assuming that it's going to be fine for all times, you don't even need gold, whatever, to all of a sudden, hey, you know, if I had to choose, I wish I had my money in gold instead of the Silicon Valley Bank. So my thesis is that, yes, this is a paradigm shift. And it might not be going back anytime soon. I watched Gary Savage's video, gold update, the bubble phase is about to begin. I mean, I don't trade, buy or sell on anyone's technical analysis or anything like that. That's not how I have made my money. And, you know, don't fix what is not broken. I've been 100% long, regardless how the charts look, regardless of what the traders say. And so far it has worked out very well. So I see no point in changing that. And that includes being a part of every major washout and every major rally. So, I mean, that kind of proves the point that it's not needed, because I haven't tried to foresee any type of turn, short, medium or long term. And it still has worked out. And trading, I would say, is a lot harder. I mean, I really wonder, because there's so many people out there on Twitter posting about TA and stuff. You know, gold is going to go there, gold is going to go here. Don't, you know, giving advice to people. Oh, wait for the dollar, whatever. It's like, I mean, some people, some of them I talked to, I mean, they don't really make any money. Everybody's so scared of paper losses. It's just insane. I mean, if you're not scared of paper losses, really, because there's a big difference between paper losses and long-term losses. Paper loss is something falling in price. But I would say over 90% treat them the same. And of course, for a trader, they are the same. But like a long-term loss is where sentiment is not really even going to bail you out. Or you buy trading sardines way too high. So let's say value is down here or something, and you buy it up here. With time, you're going to lose money. If you buy them very cheap, in time, you're going to make money. But I guess, yeah, my point here is that I don't know if he's correct, but this does fit with the tweet I made and what I believe actually happened, that this was a psychological shock for especially the Western world, and I see this as a major tailwind going forward, because people are going to remember what happened with the banks. All of a sudden, everybody in the capital markets is aware that, hey, store of value, which we thought was, you know, past us, which we thought should reside in the history books, all of a sudden we get a taste of it. So I just think that it's going to require, let's say, stronger and stronger arguments to sell gold, and require less and less arguments to actually get someone to buy gold. Physical gold purchases, I think, also rocketed higher. It's like the highest in maybe years. But again, that's not what I'm basing my investing strategy on. I mean, mathematically, we already know that. That's like, I gave up reading up too much on gold and silver already in 2014-15. It was so clear. It's the only trade that has worked for 5,000 years. We know this system is totally over leveraged. We know we won't be able to pay back our money in real terms. So I mean, it's been set. The end point has been set for, I don't know, decades. Well, kind of forever, because we always end up here. Question is always when. So in the meantime, since we know it's going to go up, or we know that gold is going to revalue, sooner or later, the merit of trying to guess when, I think, decreases. It's like a race where you know you're gonna win and you're trying to bet on when you might win it. That's why I don't use leverage or any of that stuff. Totally pointless. You know it's gonna go higher. In the meantime, I'm trying to find the companies that are cheap and preferably that will have just more and more gold, silver, copper, whatever in the future. In that case, I'm gonna get bailed out, because if metals try it sideways for 3 years and they find 300% more metals, it's valued, it's worth a lot more. So when the bull actually kicks off, I'm gonna make money anyway. And in the meantime, you have to be comfortable, you know, with being bored. So just a few points here. Okay, let's say this is the start of the bubble phase, or early beginnings. Maybe we'll have, you know, I mean, I think Felix Zulauf believes that you know, when it starts, the rest of the decade will be good for gold. Okay, I mean, in that case, I don't see why not. I mean, we'll probably know when it's, you know, everything is over with, because it's like they say, either you're early or too late. You really wanted to have physical gold going into the aftermath of the Weimar Republic, for example. But that played out over years. And then, you know, they basically reset the system. So if you had gold then, great. You had gold before the reset. That, I mean, that's all really that matters, I would say. I mean, let's say you sell all your gold here. Like, yeah, great nominal profit, obviously. But let's say you have it in fiat and then they reset the system. I mean, then it really doesn't matter what your paper profits were, because that currency went away. And the one you sold your last gold coin to for, I don't know, a trillion Reichsmark, he's richer than you now, even though you had a nominal profit of, I don't know, let's say an insane amount. So I hope my points goes through. It's like, I'm not trying to time an exit here. I think we'll kind of know when. Well, the other thing you could obviously do is like, yes, if you could time and get into something other real stuff, but it's like the worst case scenario would pretty much be to take a nominal profit and not convert it into something real before a reset. And let's say, you know, the purchasing power is the highest before the reset, then they do something with the system, so the system kind of gets fixed. Even if your purchasing power drops by 50%, because now they at least have done something about the major problem, I don't think you would be complaining. Even if you take a 50% real loss by holding into the fixing of the system. But that's just my idea. I don't know what's going to happen. Anyway, some other things I would like to just talk about. Okay, let's say we are in the early stage of the bubble phase. Okay, I already see people, you know, throw out, you know, these are the beta plays you would want to be in, etc. I think this is from Don Durrett, and he has some, you know, upside targets if gold hits whatever. It's like upside potential. We know that from a crash bottom, these beta plays can absolutely rip it. Thing is, obviously, can you, well, do we know for a fact this is the bottom? Do we know for a fact this is the source? No. So the best possible strategy is obviously to make sure you have the best returns long term, and a strategy that keeps you from making mistakes. I remember when I owned first Majestic, I bought it around here. I sold out here already because I thought it was becoming pricey relative to some other stuff. I missed out on this. Not more than that, I think. Something like, yeah, let's say 300%. I looked stupid there for a while, for sure. But since then, up until today, like 7 years later, you would be down 60% from this top. And I gave away a 52% return over, yeah, like 7 years. So in the short term, it looked foolish. But I know myself. I cannot stay in beta plays. I am very nervous when I am in beta plays. Maybe I don't like the assets. I mean, everything is about a trade. The greater fool theory. Because if it's a shitty project, it's probably not going to be a mine anytime soon, even if gold goes a lot higher. With that said, you can of course make a lot of money when we go from, I mean, when the really dumb money gets in and they overpay for a shitty project when gold has already gone up and revaluation has already happened. They are the ones that, because everything is driven by momentum, they're the ones buying this because, I can't sit to wait out. And the thing is that, yes, let's say you go in, you're all in beta or whatever, maybe you're down 70%. So you need 200% just to get back to even. Whereas if you're in a bit more unleveraged, quote, boring beta, alpha, you had more of a return like this perhaps. This is one of the hodl portfolios I manage. Well, I don't manage it too much. I mean, I think every company has 5+ bagger potential just based on the project themselves, 5 times value, not talking about anything specifically having to do with metals going up. So I mean, just compare, okay, this is from 3 years, I don't know when this started, like what, early 2020, let's say from here. So first Majestic, which I would consider a beta play, trading sardine, or Bear Creek Mining, maybe it's actually from here or whatever. They are down. They are down. So again, in the long term, that's all that matters. Your long-term portfolio returns. So yes, in a ideal world, I would exactly know when to get into beta plays. I mean, this to me looked like the start of a breakout. I mean, kind of a a reverse head and shoulders. I thought the rally was for real because miners, juniors had gone too cheap. That wasn't it. It continued to fall. Uh, 81%. So if I got that wrong, and I believe now this is just, this is a start, this is just a recall, whatever. And I would only be in beta plays, from this point I'd be down 81%. So in that case you would need like 600% from here, whatever, get any meaningful kind of return. That is why I don't like beta plays. And it's like I don't need perfection. I don't need to know exactly when I should be in alpha and exactly when I should be in beta. Because the whole point of alpha is that it's an all-weather approach, kinda. I mean, now for example, since beta is quite cheap, my preferred plays are like alpha and beta. They have resources and they have growth. So I get paid to wait via the alpha. I know I'm going to get paid via the beta. And the longer, more time I give a company, on average, they're going to be worth more and more. So they're going to revalue even higher when actually metals kick off. But it's not easy because right now, Friday, for example, I saw some super cheap alpha plays. They didn't move. While some leveraged crappy beta plays, some went up 20-25%. And it's easy to get FOMO. Especially if this is, again, you're thinking, hey, this is just a start. We're going to go up you know, let's say we have a real blow off top in a few years, like, yeah, 1500%. Yeah, but the thing is that you don't know if that's gonna happen. You don't know when that's gonna happen. How are you gonna play it in the meantime? Because a point I made on Twitter is like, if you buy shitcoins, you're gonna be scared shitless as soon as a correction comes. Because I mean, that's the whole thing. If you think the greater fool thing is not playing out, you're gonna sell every dip and buy back when you think it's on again. So I really question that the huge beta players, or like, you know, who plow into beta, I don't think they are able to sit through it. Because there's nothing scarier, I would say, you know, I know from personal experience, if I own a company that I know is not that great, where time is not your friend even, that management team is probably gonna, I mean, you know, it's a money losing mine, or it's a deposit that doesn't go anywhere, just dilutes. You need it to happen. You need something like this. You need all the greater fools to come in at once. Because if there's a bunch of corrections along the way, you know, I'm gonna feel like a dumbass. And then I'm gonna look over at the alpha place and like, oh, this company is just keeps on hitting. Oh, this went from a tier 3 project to a tier 2 project, or tier 2 to tier 1, whatever. That is actual investing. Playing high leverage beta is, I mean, pretty much gambling. Except that yes, the odds are rigged when you buy this low, but again, the point of them is you need to stick around to catch the full swing. And there's already, I mean, after this rise here, maybe this was, you know, this was the bottom. I believe so. I mean, just a week or two ago, people were already, you know, throwing in the towels again and talking about how shitty juniors were. So I really question, like, you have to do some soul searching. Which strategy can you pull off and make sense over the long term? And it's like, if we're talking, okay, what works in hot sentiment? Potential, blue sky potential. It's in hot sentiment, especially when the sentiment is really good. I mean, around this time, you know, that's when Novo ran like hell, when Garibaldi ran like hell. Some other examples as well. I mean, just the idea of blue sky potential, they might find something massive without a single drill hole. Alpha, blue sky alpha, when the potential is big, really works in really hot sentiment environment. Now it doesn't work at all, really. Now even good ASI results aren't working. Now even discoveries are priced like they don't have a discovery. And beta is obviously going to work. And some people just look at share price or market cap. Companies below 10 cents, they think it's cheap by default and they buy it up. That's why typically crap that should go down get really cheap, and then they go up a lot. Because at the end of these moves, the people who don't even care or can't even understand a company presentation or a project, whatever, they just buy stuff because they're quote cheap. Even though they're not even cheap, they're just lowly priced. My preferred vehicles right now is alpha and beta, because beta is cheap still, but I always want to feel like there's alpha. I always want to be able to, I mean, let's face it, how can you hang on to a 3-year bull, let's say, that's going to be volatile? You have to be greedy about the future. If it's a trading sardine that doesn't really create any value, how can you be greedy about the future unless the recent past is bullish? This is when you get bullish on beta plays, because the recent past is so good. This is when you're bearish in these cases. That typically doesn't turn out too well. So I don't mind beta plays. But I'm working on an article, Foolproof Portfolio, just again to try to help people to not F this situation up, because commodities are cheap overall. It's like, you don't need to be a rocket scientist. You don't need to buy I don't know if a single major is involved with any of these juniors, for example. They can still go up 500 to thousands of percent. But how scared won't you be if they retrace 30-40%? In a foolproof portfolio, we're talking competent management with high skin in the game and or third-party validation. At these prices, you're not making a mistake by default. And given where they're trading at, Montage Gold, I mean, trades at what, 100 million? Lundin's, Berwick, Endeavour, and Perseus are in Lundin's. I mean, they're not after 30%. They think this could be a major mine, and their strength is investing. They're not, I mean, Lundin's own Lundin Gold, etc., but they also have a lot of investments. They buy something when they think it's very undervalued. And not typically just because they bet on metal prices going up. So let's say Lundin's, they wouldn't get in if they didn't see 500% potential. Do you even need to play in the crappy beta plays in that case? Here you know you're not making a mistake. Like Snowline, B2Go just got in. Orion, Lotan is a big shareholder. Kinross and B2Gold are partners with Orion. Do you think their products are shit? Of course not. Irving, Newmont and Sumitomo. Last ad, $1.23 per share. I think it's trading at $1. G Mining Ventures, Lundin's and Pierre Lassonde. They're the best investors in the space. Headwater, Newcrest, Dolly Warden, Hecla Mining, Western Alaska. Absurdly good project, 35 insider ownership, and I personally expect a strategic to come in sooner or later. Cheap, based on all the potential. And then you can look at other base metals, and obviously nickel plays, etc. It's like you can bet on beta and hope that you will be able to stick it out until we get into really hot sentiment environment, and be able to sell, and be able to not buy if it goes even higher. You could do that. Are you going to be able to do that is my question. I pretty much know I won't be able to do that. I like some beta, sure, but I want to see at least some growth potential. Otherwise, I'm just, in my opinion, leaving money on the table. So, like, you have to just, retrace. How did you feel when you were in beta or some type of company? You didn't really have conviction. You were just greedy. How did you think what did you feel when it, crashed? Did you buy more? Did you buy more of Bear Creek Mining here? Whatever, shitco. I doubt it. Let's say you get all bullish on beta right now. We go up next week and then it goes like this. And you start reading on Twitter. Next target price for gold and silver is down. Are you going to sell or buy more? What I think typically ends up happening is people sell here. Well, this was such a unique example, but like they sell here, buy up here, sell there, buy here, sell there, buy here, sell there, because they have no conviction. It's like, I think it was a perfect example recently in Magna Mining. Some guy, I was at PDAC for a week and MIF, and I stayed in Toronto for a while, wasn't too active. Some guy just assumed I sold. I think he tried to reach out to me. He messaged me on Twitter like, I don't know, 10 days ago. And he asked, the old Magnus. Like, nothing has changed except the store's gotten better. Nickel price is down though. Like, yeah, my largest position. 1 week later I get a message, same guy, I guess you sold. Like, what does he get that from? And then I seen the forum, and he did not respond, which tells me so. It's like I'm his personal wealth manager or something. I mean, if you can't even have conviction in one of the most obvious cases in the entire world. We read articles, I mean recent article, Volkswagen, they're looking, you know, they're talking about its mine supply. That's the big problem for EV batteries. They're gonna get in mining. You see articles about missing nickel in warehouses. It's like, Jesus Christ. And of course, I've been talking about Magna ever since, well, for a long time. Increasingly so around here. Now I get it called a pump and dumper because I don't respond to a guy as quickly as he wants me to respond. It's like, I have bought and I have sold Magna. Right now, for example, okay, Magna is absurdly cheap, but if gold is, let's say, sentiment is starting to change in gold and silver, that's very hard. Rationally, I think Magna is the probably at least, if not the best, one of the best buys in the entire junior sector. But you saw it like recently. Gold and silver starts to go, people sell other stuff because now it's the gold and silver trade that might be starting. Nothing to do with company value, nothing to do with price per value gap. It's all about momentum and greed. But it's like, again, is this a blessing or a curse? If you didn't own any, I mean, are these lows blessings or a curse? Totally, if you're a 95%er, you're gonna sell, so it's gonna be a curse. If a cheap company becomes cheaper and you can buy it, that means higher future returns. But like Magna is so far away from a pure trading sardine it can get, pretty much. They can be in production in like 12 months. Force the issue. Monetize. I mean, show the markets like, yeah, you know, if they, let's say, you know, get into production and just throw off 30-40 million, whatever. I mean, they're obviously not going to trade down here. But that goes to my point about conviction. What strategy can you actually pull off? It's like, what does it matter really when I'm buying or selling? I don't even own well, I might own all. Well, I think I'm gonna have a long. No, I don't even own G Mining Ventures as an example. What does it matter if I'm buying or selling it? I mean, I don't share your profits or your losses. No, there's a bunch of companies I forgot to include, of course. I mean, Elore should be in the silver here. And on the point of Elore, it's like, yeah, if they're going to table the resource soon, which I think will be a pretty big one, with hundreds of millions of ounces of silver, might get fun. But point being, you have to do some soul searching. What works for you? I know there's going to be FOMO. I know there's going to be shitcoins that go up, and people are going to be bragging about their shitcoins going up. And you're sitting there maybe in alpha place that don't move too much yet. But the thing is, most people don't make money in this sector. So let's say you're down 70% because you're typically in shitcoins. You need over 200% from here just to be break even since you bought in. Whereas a quote boring hodl portfolio might be up over the last 3 years. Might be up, let's say, at least 100%. You don't need any returns. The other guy who's been in shitcoins, he needs 200% to get to break even. Then he needs 100% more to get where you might be at in your boring hodl portfolio without any timing or whatever. And if you do this over the long term, assuming this guy plays it perfectly and actually sells here, which I doubt he will do, you're gonna crush them anyway. So point is, you don't need to be perfect. Perfection is not needed. And before you just buy any type of beta play, etc., you have to front run how you're gonna react in different future scenarios. Here there was not really any time to react, it just went straight up. But what did you do when it topped? Did you give most of it back and sold here? Then it's no good. I mean, a good strategy is one that you can follow forever and will pay off great in the long term. There's no shortage of people, I remember maybe it was around here or here, who were bragging about their portfolio returns. Well, at least individual picks. They haven't done a lot of bragging lately. Maybe they gave it all back. You don't see that. You only see people brag about individual plays, individual trades. Almost nobody brags about their long-term portfolio returns because they don't have anything to brag about. And everybody's gonna want you to buy their company, especially if it's a trading sardine, because that's the whole point of it, just to push it higher. It's like in Magna. Why don't I feel the need to post every single day while I'm taking heavy paper losses? Because what is there to write about? It's just becoming cheaper. It's not a greater fool trading sardine. It's one of the best management teams we could ask for. And there's a bunch of majors looking at Magna. It's like nothing has happened. The story's gotten better. Yes, nickel price is down though, but it's like more time has passed and they've been working every single day since then. We haven't seen it in a news release because that's just a summary of what recently happened. But we're waiting for results from the new zone 1 kilometer away from Green Hill. It's cheap without that zone delivering anything. But what if it delivers something good? And you could buy it at one, I don't know what the was like. Well, like 40% cheaper from the top. Is this a blessing or a curse? Depends if you have dry powder. Depends if you have something more expensive to sell and buy, obviously. But assuming this is all on track and Jason gets his $1 billion target, this might provide a much better return than here. But it's like if you're one of those guys who's like, yeah, this guy hasn't talked, in this case, hasn't talked much about Magna in the last 1.5 weeks. And now the price is down, so I'm getting scared, so I'm going to sell, and then I'm going to blame him, not take any kind of responsibility or understand how price to value works. It's like, do you think, I don't know why he even bought the stock in the first place. If you need your hand held every single day, it's like that's not a good recipe. You're probably, if you can't even have conviction in one of these cases, yeah, that's a problem. It's like I'm always fully invested. So if there are private placements that I like, my largest liquid position is Magna. So if I need to sell some to get into a private placement with warrants, do you think I sell down here when it's just the case is just getting more and more absurdly good? Of course not. But that's how it is when you're fully invested. I mean, I just can't believe how cheap this is right now. It's like the only advanced nickel, copper, PGM junior in all of North America. But the market is brain dead. You can statistically show the market is brain dead. It's like I've done some exercises just looking at, companies with multiple targets, major backing, and if you add their market caps together, they're pricing in, 20% chance of finding one solid project. And they might have 50 targets and 4 discoveries. Doesn't add up at all. Makes absolutely no sense, but that's where we are. This is absurdly low. A lot of the high quality juniors are absurdly cheap. That's just how it is. Everything is a buy. Everything above average quality is a buy right now. Trading sardines, yeah, from a trading sardine perspective, sentiment perspective, yeah, I would say they're a buy. But again, use the strategy you think will net you the most over the long term. And front run yourself. How are you gonna act if the sector crashes 30%? How are you gonna react if it goes up 30%? Are you gonna buy more? Obviously, if price goes up more than value, the opportunity is getting worse. But will you simply be piling in more and buy every top or not? I mean, again, it's obvious that since this market crashes and rallies in such a huge way, a monkey playing Pong could beat this. Still, almost nobody makes any money in miners, juniors. And if you believe that the market is always rational, the worst case scenario, you're paying a fair price for whatever you're buying. How does that, go along with almost nobody making any money? Obviously, it's up to the person who basically misplays it. So it's all about personal responsibility and the decisions we make. I know some crappy portfolio with a bunch of shit codes is gonna outperform if we go from here to here. It's probably gonna outperform my portfolio. Really gonna outperform my hodl portfolio for a while. Then it will top, and who knows what happens then. And my hodl portfolio with a lot of alpha and alpha beta plays probably will keep chugging along. No need to trade. I mean, I'm literally, it's like going away to PDAC. The markets were crashing at the final days of PDAC. It's like it was pretty good. It's like I don't really have a worry. If there's no news out, nothing has changed. If you're a trader, you have to be working all the time. It's like this is just a fun tweet I saw. Like, gold hit my 1960 support line, next target 1980. What are you gonna do with this? I'm betting. I'm 100% deployed, betting on my picks on average going something like this in value. That's how I can stay 100% long, 100% exposure. Doesn't matter where metal prices go, etc., because in the long term it's a weighing machine. But in the meantime, you can have years of downward action, sideways action. But really good return on, let's say, a relatively large amount of capital. That's great. That's great. This is better than most people do it. And this portfolio is basically, buy and hold, since everything is cheap. It contains none of these, I think. Some perhaps, but mostly stuff like this, like where I know they're cheap to begin with, and you have people smarter than me saying, "Hey, this project looks good," and given where they're trading at, it's like Snowline. B2Gold call it one of the more significant discoveries in Canada in recent times. Is it trading like it is? No, I don't think so. Is there upside potential? Sure. Montage Gold at 100 million, obviously not pricing in a full-blown major mine. Orion Resources, the same, not pricing in a mine or half a mine or whatever. Irving Resources, not pricing in something Newmont would be interested in. Lundins and Pierre Lassonde, I mean, that's harder to say. But they're still, I mean, I think they have big plans because they can't easily sell, so I'm guessing they're after growth. So, I mean, Hodl, Headwater Gold, Basket Case Cheap, Dolly Warden, Hecla Mining, better than ever. Western Alaska, yeah, superb project. This coming season should be really great. Fireweed Zinc. Last ad 74 cents by Lundins. I don't know what is it trading at now, but around these levels. I mean, do you think Lundins are in? Do they see like 20% upside? Of course not. They're not penny flippers. So that's stacking the odds in your favor and being able to have a low maintenance portfolio as well. And the thing is, of course, if you know every single one of these are not pricing in much of the potential or blue sky potential. Let's face it, if you can short-term trade all of these and totally skip the benefits of a superior management team, etc. But let's say Fireweed Metals alone works. In maybe 2-3 years, it might be up 400%. That would pay for a lot of other stores going to zero. Faraday Copper, who knows? Maybe that's up 400%, etc., etc. So it comes with time, but you can F it up on the way by trading or selling out and trying to trade, basically trying to predict every short-term movement, like trading pennies in or picking up pennies in front of a steamroller. But if you took it to the extreme, that, for example, and obviously Laura should be in here, simply because, what's his name? I don't remember. The guy from... who's that guy from? Yamana. So that's third party vote of confidence. Anyway, it's like, let's say these companies here and a few others. First of all, you would have, diversification, metal diversification. If you held these forever, they're either going to be bought out or they would have gone to zero. Where they are in a month from now, I have absolutely no idea. My point is, given they're cheap right now, relative to either what they have and or to what they might have, and you have a bunch of smart people or companies saying, hey, they might really have it, and they're trading at, I don't know, 20% of what that might be, obviously there's upside there. But to capture that upside, probably going to take a few years at least. So betting on this and letting, the winners win big, offsetting the losers, that only is possible if you can hold them for a long time. If you're trading them, you're missing the whole point of how you stack the odds in your favor. Because a good management team is on average creating value every single day. And every single year. So if you hold a stock where the management team has been working for 3 years, they're probably going to have created more value in 3 years than if you gave them 3 months. But if you're in and out and trading, etc., sure, the trend might be up for the stock, etc., but you're not really taking advantage of the intrinsic alpha of a superior management team. I hope some of these points made sense. Again, it's like key points I would leave you with. It's like when we go into hot sentiment potential and especially blue sky potential, it's going to start to look attractive again. Beta could obviously do very well, shitcoast, etc. small market cap companies, which tend to be shitcoins. Not always. I mean, there's some juniors out there with major support that are trading like shitcoins, but really aren't. So it's like if you, I mean, Gold 79, for example, they have a Kinross as an investor. Still, it's trading at $6 million or something, like it was on an average shitcoin. I mean, that might be 300% better opportunity than some other shitcoin with no vote of confidence, etc. But the focus should always be best returns long term. Let's say you get fully into beta right now. Are you gonna F that up on the way? Or are you gonna be able to sell them if they reach a high, even if they go higher? Are you not going to be able to sell them? Or are you going to be thrown off along the way because you have no conviction, because you know it's a trading sardine? If you can barely hold on to some of the highest quality juniors right now, what on earth makes you think you can hold on to a shitcoin if it goes south and not buy instead of selling? It's like, I accept the fact that when this sector goes from here to here, typically I won't make the most amount of money. There's gonna be a lot of portfolios people out there who are gonna make more from here to here, but from here to here, I bet I beat all of them, because they're gonna, if it doesn't go exactly like this, they're gonna make a lot of mistakes, or they might be in shitcoins all the way back here, etc., etc. So yeah, they took a very good return, but then they might go nowhere if they don't, trade or whatever. So again, front run how you're gonna think, how you're gonna feel in any type of scenario. Because when everything is feels good and you're in beta, it's very easy to hold, very easy to buy. But it's also very easy to buy high, and it's very easy to sell low. What keeps you from buying high and selling low? That's, I guess, an important thing. And again, there is theoretically, we don't know the answer. That's the whole point of a strategy, because the future is unknowable. Maybe you should be 100% in shitcoins right now, because this sector is just going to go straight up for the next 6-12 months. That is a scenario. But we can't guarantee that's going to happen. What happens if it goes like this and your alpha plays go like that? We don't know. All that matters is maximum long-term total portfolio returns. Not some blip here and then you screw it up. Not a good buy here, or I was going to say good buy here and then you sell here. That won't do it. Yeah, and that's why I keep, most of my juniors, they have I can see growth for 3 years, which means that, hey, unless things change, I could see them become more and more valuable over the next 3 years. Then a positive sentiment surprise, or a positive gold price, silver price, copper, nickel surprise becomes a bonus, not the requirement. Trading sardine, that is the only requirement. And then you have to time it, because they might not have created much value. It's going to go down and crash one day. So it's going to go like this. So again, I'm not telling you what to do. That's totally up to you. But be prepared. And in my opinion, the most foolproof way to beat the market, especially starting off here, is to simply pick the companies where people that know more than you, are smarter than you, are better investors than you, have already given thumbs up. And that doesn't go for most of the companies here. Highcroft, as far as I understand, is a really, really shitty project. Probably never gonna be. But that might not stop the GameStop people from buying it up. So you can make a lot of money there in a period of time. Question is, are you able to hold on and get out and not get back in if it keeps going higher? I just cannot stand buying a shit code that goes up, then an alpha play works out how I hoped it would play out, and sure, I made money on the shit code, but then you have some unforeseen crash or sentiment turns, etc. I just feel like an idiot. That's a personal thing for me. I simply don't jive well. I don't jive well with trading. I don't jive well with trading sardines. And again, if in an optimal world, I would exactly know when the real thing starts and not the fake thing starts, and you would catch all of this and then switch into alpha plays. But that is pretty much perfection, and you don't need perfection. That's one thing. It's like, always keep in mind, you don't know how much people are down already. You don't know how much people have of their portfolio in a particular play. The more bragging you see, typically the worst, the more they feel they have to prove, meaning that typically they have really bad returns and jump at the opportunity to brag about something. Anyway, thanks for listening. Consider me biased. Don't treat this as investing advice. You're responsible for your money. I don't share your profits or your losses. I own a bunch of companies that I mentioned in this video. Some are banner sponsors, which makes me twice biased. I'm not an investing advisor. So yeah, some food for thought at least. Thanks for listening. Bye.